Welcome to The Journey to Home, a podcast offering mindfulness and inspiration for finding and creating your first home. I'm your host, Latoya Cooper. I'm a North Carolina realtor, and my goal is to help you feel informed, empowered, and at ease as you navigate the home buying process. Whether you're dreaming about home ownership or actively preparing to buy, each episode will give you the tools, insights, and encouragement to make your move and turn your house into a home. Hello, and welcome back to The Journey to Home. I hope that you're having an amazing week. So today's episode, we're on episode 15. Really rolling, huh? So today we're going to talk about something that no one wants to really discuss, but we're going to talk about what happens if you can't buy a home right now and what to do about it. Okay? The truth is that, I've worked with many potential buyers, really good people, okay? And, but really I have worked with more, people who wanted to buy a home and who wanted to start the process. More of those people who actually weren't able to go ahead and start that process. Then I have people who actually were ready and were able to go ahead and make it all the way to the closing table. The truth is that some people just, sometimes buyers aren't 100% ready, and that can be for different reasons. So in this episode, we're going to break down some of the reasons why a person may not be ready to buy a home right now and what to do about it. Okay? All right. So let's go ahead and break it down. And because the thing that I really want you to understand is that even if for some reason you're not able to purchase right now, it doesn't mean that you can't purchase at all. It just means that maybe you just need a little bit of time to put some work in. Maybe only a couple of months. Maybe you're going to need 6 months. Maybe you're going to need a little longer. Maybe you're going to need a full year. But it's all about making a plan and making small steps, okay, so that you can accomplish those goals and get to where you want to be. All right. So, number one reason could be low or no savings, okay? And that's one of the biggest hurdles, really, because buying a home, you have upfront costs. You have your down payment, your closing costs, your costs for your inspections, and then even you have to pay movers when it's time to move, and possibly even purchase new furniture. So if you haven't saved enough, then that can definitely delay your home buying journey. But some things that you could do is, for one, open a separate savings account for your home buying fund. Make it your home buying fund, okay? It is just for your future home, okay? Now, you can also look into down payment assistance programs. Many first-time home buyers qualify and they don't even realize that. And sometimes those programs can help with your, they can help with your down payment. So you may not even need a down payment. So just look into those down payment assistance programs. That's something that your realtor can help you with as well. But another tip is to set realistic savings goals. You know what your budget is every month. You know where you can cut corners. So you know what extra you would have to go towards savings, okay? So don't make a huge savings goal if you know that it's not going to be possible, or you know that it's going to put financial pressure on you. Okay, so even if it's like $100 a month, hey, that adds up. So remember, you don't always need like 20% down for your down payment. Sometimes it's 3%. Sometimes it's zero. Like I said, if you qualify, just depending on your situation. So when it comes to saving, just save and make it consistent, because every little bit will help you. All right. Now, another issue that can prevent potential buyers from buying right now are credit challenges. Now, if your score is a little shaky, hey, life happens, okay? But your credit score, it does play a huge role in you getting a loan because, a better score means a better interest rate. So, for one, what you can do is, check your credit report. Go to annualcreditreport.com and look for errors. You can go up there for free. It used to be once a year, but I believe someone told me that now you can check it once a month. But in any case, take a look and check for errors, because mistakes do happen. So make sure that you're checking to make sure that everything is right. Another thing you can do is pay down those credit cards, especially the ones that are close to maxed out, because you really never want to never want to have your balance more than 20% of the total amount of the good of your total credit limit. So if you have a card and it's close to being maxed out, go ahead and get that one paid down. All right, get those paid down. If you need to, set up auto pay reminders so that you don't miss any payments going forward. Your credit history, those things make a difference, and you want to make sure that you have a history of making on-time payments. Now, don't open any new credit accounts unless it's absolutely necessary. Okay, so when you are doing your weekend shopping, at Old Navy, and they ask you, do you want to open up a card to get that discount? Just say no. Okay, no new credit accounts. Okay. Now, another tip for keeping up with your credit is to use the MyFICO app, because I've definitely seen times when potential buyers will base their credit readiness, or their credit score on what they see on like Credit Karma, or even like the FICO scores provided through some banks. But the truth is that, and then when they go to get their pre-approval, they realize, the credit score is showing up way lower than they thought. Now there is a number one, they use a different they use a different FICO score than what mortgage lenders use. So that's one thing. That's one issue of why it can be totally different. So you can go to the MyFICO app. It is $39.95 or $39.99, $40, okay? But you'll get to check your credit score, and there's a tab in there that shows your mortgage FICO score, and that's going to give you a more accurate picture of what a lender will see when they pull your credit as far as your credit score. Okay, so if you want to, that will be a really good tip if you are able, and it's something that you want to do, is to go ahead and get that MyFICO app so that I would really recommend that. Okay. All right. So another block to buying a home would be a high debt to income ratio, or DTI, as your lender may call it. Basically, it's a fancy way of saying how much of your monthly income is going towards debt. And that's credit card debt, student loans, your car payments, just how much is going towards debt in general. And if that number is too high, then lenders may not feel confident that you can take on a mortgage as well. If you get your pre-qualification and that is the issue that comes back, you talk to a lender, and they're going to, give you a clear picture of what you may can actually afford. And if they tell you, well, your debt to income ratio is too high, some things you can do is focus on paying off those high interest debts first. All right. Now, another thing, hold off on taking out any new loans. All right. Your goal is to purchase a home. That's the goal. So no, don't take out any other loans. All right. Just hold off. Don't do anything. If you can, increase your income. All right. So even working a part-time job or taking on a side hustle, that can help to improve your ratio as well. All right. Remember that we're talking about making progress. All right. This is not about perfection. It may not be a smooth journey, but we're going to make progress, and every little bit helps. Okay. All right. So something else, hey, unstable or low income, that can definitely prevent you from buying right now. All right. So, the truth is that lenders, they want to see steady income. So even if you're self-employed, or you're working gig jobs, or even if you just started a new position, then you may find it a little bit more challenging. But it's okay. There are ways to get over those hurdles. Number one, keep good records, especially if you're self-employed. Make sure that you are keeping good records. Document everything. All right. Keep your bank statements, any invoices, pay stubs if you have them. That is the best thing that you can do in situations like that. Just make sure that you are keeping good records and documenting everything. Now, if you're new on a job, make sure that you're past your probationary period. Okay, which is, it can be, but usually maybe 90 days depending on the job, but just definitely make sure that you're past that probationary period before you even attempt. Okay. Because although generally they want you to be at a job for for over a year, depending on the lender, sometimes, especially if it's a situation where you're going to a job where you're making more, that could make a difference, but still wait until you're out of that probationary period. And if possible, add a co-borrower, okay? And let it be someone who has stable income, all right? Because, I mean, their credit profile matters just as much as yours when it comes to, getting a mortgage. So, you don't have to, have the perfect job situation, but you do want a job that's solid and one that's consistent. All right. All right. And let's talk about the market, because market conditions, they can also sometimes prevent you from buying when you want to. Oh, yep, that's the guinea pigs. All right. So sometimes, we find ourselves in situations where the home prices are just too high for your budget right now. And that can feel frustrating when the house that you want, maybe in the location that you want, is just way out of budget. But here's the deal. Okay, let's, number one, start by just getting a pre-approval, because that's going to tell you what you can afford today. Okay, that's going to break it down for you, interest rate and all, all of that. Mortgage insurance, everything that makes up your mortgage, all right, your HOA fees, it's going to tell you what you can actually afford. Okay, well, not HOA fees, because that's going to depend on the home, but your payment, your interest, your taxes, and your insurance is going to tell you what you can actually afford based on your income. All right. And then you may have to, or you may want to consider adjusting your expectations, and, maybe looking into areas that you hadn't considered before, especially if the home prices are closer to where you want to be. And I was talking to, a lender the other day, and something that she pointed out was that sometimes especially when it comes to your first home, you're really kind of looking to just get your foot in the door and to get a mortgage. So, even if the home or the location isn't necessarily what you originally had in mind, just being able to afford that mortgage and to have that mortgage reporting on your credit, that's going to help you so that a few years down the road, you can sell that home and you can afford the mortgage that you really want. Of course, income being, enough to being able to afford it income wise, but lenders will be more willing to extend like the maximum amount on that mortgage, or that you can afford, if they see that you can handle a mortgage, basically. So that makes a difference. So I thought that that was interesting. So yeah, definitely, consider adjusting your expectations and just looking into different areas if the market conditions are proving to be a hurdle where you're currently looking. But at the same time, I know that there are definitely people who just don't want to settle. And there's nothing wrong with waiting if you want to wait. The perfect home, it will come eventually. And if you're okay with waiting, hey, there's nothing wrong with that either. But if you need to wait, of course, use the time to save and to plan. All right. Like I said, the right home at the right time, it's worth being patient for. So, the market won't stay like this forever, and your dream home, it will appear. So you just have to kind of make the decision on whether you want to wait or if you want to go ahead and begin building that equity. Okay. All right. Yeah, the guinea pigs are busy today. All right. And then finally, another roadblock could be personal readiness, because sometimes the reason that you're not ready is because you're just not ready, and that's okay. I actually did an episode, I don't know, a couple of episodes back about shifting your mindset, from renting to one of home ownership. But, the bottom line is that, sometimes if you're already going through a life change, like let's say maybe you just started a new job, or you're expecting a baby, you're relocating, or you're considering it, or maybe you're just not sure about all of the responsibilities that come with home ownership, and you're not really sure if you're quite ready for that. It's okay. It's okay just to wait. And what you can do during that time, for one, is to keep renting, but rent with purpose. Okay, be intentional about it. When you're renting, maybe rent in an area where you may want to buy later. So if you're kind of interested in being in a certain area, in a certain city or town, you try to go ahead and rent there so that you can get to know the area and know what it's like. But also pay attention to what you like and what you don't like when you're renting, and maybe begin to make a list of the things that you like and the must-haves, or the things that you would like to have when you buy a home, versus also, note those deal breakers and things to look for that you just don't like, because that will definitely be helpful when the time does come and you are ready to start your home buying journey. All right. But also, of course, use this time to plan and to build your credit, to save, and to create a home buying plan. And talk to a real estate agent early. Even if you're a year out, I can help you to build a strategy and a timeline. So go ahead and make that connection, because, it's always better when you're working with someone and you're able to kind of build a relationship and establish a connection, versus being ready to buy today and meeting with a realtor that you really don't know, and going through this process without any time to even get to know and trust this person. So go ahead and make that connection so that you know them, you're comfortable, they're familiar with your needs as well. That can be valuable when it comes to the home buying journey. Okay, so a realtor who already knows what you're looking for and understands your situation can really be on point and be on the lookout for what you need, and can help keep you accountable. That's something else that I do as part of the home buying, the first time homeowners strategy session. If you're not ready within that, we of course create a plan, but also we do accountability checks just to make sure that you're on track. All right. So yeah, so if you're, feeling like you can't buy right now, it's okay. You're not the only one. It is literally, it's just sometimes these things happen, and, buying a home is not just about the money, but it's also about mindset and, It's about timing and it's about planning. And, so sometimes, it doesn't happen just like that. Sometimes it does take a little bit of time, and that's okay. The important part is that you have a plan and that you're working your plan. And eventually, I promise you, you will get there. If you found this episode helpful, be sure to follow and leave us a review. Then click share and send this episode to a friend. If you live in the Triangle area of North Carolina and you're ready to explore home ownership, schedule your free Future Homeowner Strategy session using the link below. This 20-minute session is designed to help you get clear on your next move. We'll talk about what you're looking for in a home, review the current market to see what's available, and create a personalized plan to help you move forward. Thanks so much for listening. Until next time, stay mindful, stay inspired. Happy home hunting.